The Fed's two-day policy meeting kicks off today. Steve Leisman reporting that the Fed will probably hike rates by 75 basis points tomorrow. For more on this, let's bring in former Dallas Fed President Richard Fisher. He is now senior advisor to Barclays. He serves on the boards of Tenet Healthcare and Warner Brothers Discovery and is, of course, a CNBC contributor. And Richard, thanks for being here today. A lot of people, I think the market, something like 90% at this point, some indications are suggesting that the Fed will hike by 75 basis points tomorrow. Is that your feeling of what they'll do, and is it the right move?
Well, good morning, Becky. Not sure this is what they will do, and I've thought of what I would be arguing at the table, even though, as you know, I was viewed as a hawk. I think it's an even spread, 50 or 75. First of all, you don't want to make it look like the market's pushing you around. You have already laid yourself out on a 50 basis point basis. All the bank presidents, Leo Brainerd and the chairman, have done the same thing. But you also want to show that you're reacting to the data. Now, they knew that inflation was running higher than even the number that was reported. We know because of several indicators. One is that the rents, or the cost of living in terms of space, is underreported. It lags. Contemporary data shows that it's running at a much higher rate. That's certainly true. And also healthcare costs are higher than are imputed into the numbers on the PCE. So I don't think there's a surprise here for the Fed in terms of the CPI number that's reported. The other thing, too, Becky, is if you look at the NFIB report that came out this morning, that's the National Federation of Independent Businesses. You know that I like to look at that data. It was released about 40 minutes ago. Small businesses, medium-sized businesses, these are private companies that employ the majority of Americans and are the job creators in our country, run by women and men that create things from scratch that aren't publicly traded. The highest number in 48 years in terms of their willingness to take aggressive pricing to continue doing so. And also the highest rate since the surveys began in terms of not being able to find the workers that they need. So the employment situation is still relatively strong. There is a wage price spiral. The Fed knew this before the meeting. The memo that went out last week, they sent a decision memo out to be debated by the bank presidents and the governors, would have already gone out before the Friday CPI report came out. So I think there is some inertia here to keep the 50 basis point rise. And yet what really counts here, Becky, is what they say, not necessarily what they do. They will have to signal that they're going to be tougher going forward if they don't move 75 basis points at this meeting.
Richard, my biggest question is why Jay Powell put himself in that box to begin with. Why did he say that the 75 basis points is off the table, especially if the Fed kind of knew that inflation was running hotter?
Well, he has started this practice of, in a press conference before the meeting even takes place or in a testimony, saying what they're going to do. And that's a bit of a trap to fall into. As you know, I think very highly of Jay Powell. But he's done something very different than any Fed chairman's ever done, which is to say well before meetings start what they're likely to do. And of course, his most recent public utterances, but also the vice chair, Brainerd, and also several of the bank presidents, with one exception, have said 50 basis points. So by saying what you're going to do, I go back to the Volcker days and the Greenspan days, where you just, you might indicate through the Wall Street Journal or someone else that what you may be thinking about doing, but you didn't say it outright. And that's what Powell has started to do, and he may be trapped by that right now.